Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me to the end of the week. And with Friday's session, it was a very whipsaw price action. After the overnight, it was unexpectedly that Wall Street Journal put an article out stating that the US could ease tariffs on Chinese goods during their trade negotiations with China. That idea, though, was floated by Treasury Secretary Stephen Mnuchin, according to the Wall Street Journal report, which cited people close to the matter saying that this could actually eventuate. However, the report was soon pushed back from US Trade Representative Robert Lighthizer, who thinks any concession could be seen as a weakness to the US. A senior administration officer who participated in a trade meeting with the president on Wednesday later told CNBC that there is discussion of lifting tariffs now. The official also said President Trump has no interest in making decisions now. It would put him in a weaker position. So the market overnight rallied to the resistance of 72.20, right in the arms of the bear camp. And from there, the bears retaliated quite heavily and pushed the market back to pretty much where it started, around 71.85.95. It is to suggest that from the rejection, any challenges towards that level should still find weakness and not sustain. I do believe that although the market keeps bombarding this level of the 60-day moving average, it should eventually see a breakdown, and I expect to see 71.35.45 re-challenged, as that was the low overnight. A break beneath there does give further scope and an opening towards the 70 region. Well, surprisingly, the dollar index has recovered further over the last 24 hours. Now, the US dollar index, which measures the greenback strength to a basket of 6 major currencies, still holds to a short-term threat from a technical perspective as it notches higher and posts a fresh 9-day high of 95.90. With the MACD also supporting the move for a further bullish case, does represent further weakness to the downside for euro and ultimately should reach the target of 113.0520 and reassess from there. Any advances should find resistance around 114.35 on the day. Well, the dollar yen did pull back slightly, but found support close to around 108.45. It is assessed as the market recovers further. I do believe that we are looking for a further rise, and given the target of around 110 to 2025, that is. I do believe any dips should remain shallow. Looking at the sterling, well, the market also surges higher and clips a high of 130 and backs away quite sharply. It is assessed the market is still short and therefore from this point in time could still see another challenge towards the top side. Now, where we get short is around 130 up to 131. I feel that is where the market's likely to be in terms of supply, and therefore see a rejection eventually from there and plummet back towards 127 and down lower to 124 as a broader picture. Well, you can see here that this up channel on the dailies that finally broke is now serving as support, and at this stage is offering for gold around 1,288 to 84. It is assessed, though, that from a technical point, we shouldn't get too bearish because a break above 1,300 should ignite the move up towards 1,350 as a potential target and reassess from there. Dips, as I mentioned, to be shallow. And wrapping up with oil, well, the market's getting closer and closer to this neckline at 52.90 after the high posted last night was at 52.82. It is assessed, though, that further demand could actually see a break through 52.90 and then see a rise up to $55 with the measured move seen to around about $64. So therefore we could see further encouragement if we see a break of 52.90. I'm a bull and I do like this pattern, so I do believe the market will break this level and therefore could look up towards that objective. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to the beautiful weekend.